Hi, I am Ahyat, and today we're going to learn how to become a strategic property investor. We're in the third mindset, which is asset selection, and we're in the third stage of the selection process. And we're looking into what makes an asset investment great. We're looking into good potential for capital appreciation, and number one is buying below market price. Now, there are 10 things that I feel you can do to help you buy below market price, because when you buy below market price, that's when you make the profit. You make the profit when you buy. You don't make the profit when you sell. If you buy something that's overpriced, then it's very, very difficult for you to make the profit. So you've got to buy properties below market price. Now, how are you going to do that? So you can do a couple of things. I've got 10. Number one is you buy from developers. You know, some people argue with me that some developers are already launching their projects based on future pricing, but most of the time, properties right now, if you buy from developers upon completion, upon construction, when it's completed, the properties already increase, increase in price. So there's some upside on that. Number two is you want to buy early. So what it means is timing, right? You want to buy early. So let's say you are able to enter a project which is a big project, which is in the first phase. How many of you would agree with me that if you bought the first phase, the developers are going to continue to raise the price ceiling on the subsequent phases? So if you bought from the first phase, there's a higher possibility, better potential for it to grow. So buying early. Number three is buy from desperate sellers. I just want to talk a little bit about desperate sellers. Some people say, Ahyat, desperate sellers do not exist because investors in Malaysia are so determined and are so aggressive. They want to squeeze the buyer for every cent they're worth. But to tell the truth, desperate sellers exist if you look hard enough. And in my, a little over 10 years of experience in investing in property, I had my fair chance and opportunities in investing in desperate sellers. So desperate sellers could be people who have problem in their businesses, problem, with getting divorced and so on. So you need to constantly look for them. Okay, that's number three. Number four is buy from, uninformed sellers. Now this is cool. Desperate sellers and uninformed sellers are two different things. So let's say uninformed seller, you've got a row of shop lots. Everybody is selling at, let's say, 3 million ringgit. And suddenly, when you look hard enough, you ask around, and you bump into the owner and said, hey, I want to buy a shop lot here. How much you want to sell it? Suddenly he said, I don't really want to sell it, but you know what? I'm okay with 2.5 million. It's not because he's desperate, but because he's uninformed. And as funny as it may sound, there are some owners like this who are really uninformed. Sometimes they are always overseas, and they've got so many properties anyways. So sometimes when you said, hey, you know what, 2.5 million, I want it, and he'll be more than happy anyways. He'll calculate his ROI and how much he's gonna profit, so he'll be happy with it. So uninformed sellers. Number five, we've got distressed assets. I'm just going quickly. Rundown assets. So distressed and rundown assets is basically, distressed assets are going into auction. If you're lucky, you can meet that owner. You just, manage to get a good price for it before it goes into auction, or maybe when buying properties in the auction itself. So that's distressed assets. Rundown assets are, all those houses that are not well maintained. And nobody wants to buy it. You can buy it very, very cheap. I know it's not very easy to find these type of assets, but if you look hard enough, you will find them. And you've got number 7, Bumi lots. For those of you who can qualify for Bumi lots, which you get additional discounts, you might want to consider buying Bumi lots because they are naturally slightly cheaper than everything else. Of course, the upside to them is limited by the fact that it is Bumi lots. But then again, rental, nobody actually asks you, I'm paying rental for a Bumi lot or a non-Bumi lot. So sometimes the yields are better. But we're talking about good capital appreciation. It will get sucked easier. I mean, this is basically some strategies on buying below market price. Okay, so we've got buying through investor groups. Okay, buying in bulk. Okay, so 8 and 9, well, basically it's buying as a group, buying in bulk. So as a group, many investors buy many units, so you can sort of get a lower price, below market price. And buying in bulk is basically if you as one person buying a lot of property, really a lot, then developers can give you a good rate. So number 10 is be a strategic negotiator. How many of you think that it's impossible to negotiate a better price with a developer? Sometimes it's possible, sometimes it's not. It's worth a try sometimes. You can negotiate, and if you're a strategic negotiator which always thinks win-win, then you will be able to buy a property below market price. So that's just a little bit I just want to share about buying below market price. So we'll look into the other 2 factors that make a property have good potential for capital appreciation. Thank you so much for watching, and we'll see you in the next videos. Thank you. Bye.